Good morning, everyone, and welcome to today's presentation. I'm excited to guide you through our performance report on the NSE and BSE mainboard. On this slide, you'll see the key details. As of May 2026, we're looking at the latest prices with a clear disclaimer that this is not investment advice. We've covered data from 2021 to 2024, highlighting the worst performer with a decline of 86.5%, and identifying 9 companies that have been notably affected. We'll also review IPOs listed during this period that are currently trading at 50% or more below their initial listing prices. Over the next few minutes, we'll explore these trends and insights to better understand market dynamics. Let's get started. Let's take a closer look at the sources of our data. As you can see, we've relied on public information from NSE and BSE, along with company disclosures and data from various financial portals, all as of May 2026. It's important to note that the prices shown here are indicative, based on public market data, but this is not investment advice. Now, when we talk about the scope of this report, we're focusing specifically on companies whose current market price in May 2026 is at least 50% below their IPO listing day closing price. This helps us identify stocks that have experienced significant declines since their IPO. We've filtered our data to include only IPOs from the NSE and BSE mainboard that were listed between January 2021 and December 2024. This timeframe gives us a relevant window to analyze recent IPO performance. Finally, the key points to remember are the focus on the initial issue price, first day listing price, and current market price, along with details about the sector and year of listing. All of these elements help us understand the performance trends and the scope of this report, which is aimed at giving you insights into IPOs that have seen notable declines over this period. Let's take a closer look at this table, which highlights some notable IPOs that are currently trading at least 50% below their listing prices. As you can see, the first company on the list is Nykaa, a prominent player in the beauty e-commerce space. It listed in November 2021 at Rupee 125, but its current price is around Rupee 2001. Despite this, the Delta Versus listing shows a decline of about 86.5%, indicating that the stock has fallen significantly from its IPO price. Moving down, we see Fino Payments Bank, which operates in the payments and fintech sector. It also listed in November 2021, starting at Rupee 577, and is now trading at Rupee 543, with a decline of around 74.8%. Paras Defense and Space, a company in defense and aerospace, listed in October 2021 at Rupee 175, but its current price is Rupee 469. However, despite this increase, the Delta Versus listing still shows a decline of approximately 66.9%. Similarly, AGS Transact Tech, involved in fintech and ATM services, listed in January 2022 at 175 and is now trading at Rupee 166, reflecting a drop of over 62%. Other notable names include Supriya Life Science in the pharmaceuticals sector, Brainbees Solutions, known for FirstCry in baby and kids retail, and Cartrade Tech, an auto marketplace. All these companies have experienced significant drops from their IPO prices, ranging from about 54% to over 86%. What this table highlights is that, despite initial enthusiasm at IPO, many of these stocks have seen substantial declines. This could be due to various factors like market corrections, sector-specific challenges, or company-specific issues. It's an important reminder that investing in IPOs requires careful analysis, especially considering how volatile some of these stocks can be after their debut. Overall, this data underscores the importance of not only looking at the listing price, but also understanding the broader market dynamics that can impact stock performance over time. As we look at this slide, you'll notice that the larger bars indicate a deeper loss from the listing day price. Essentially, the bigger the bar, the more the property's value has declined since it was initially listed. This percentage decline from the listing price shows us how much the market has shifted since the property first hit the market. It's important to understand that these declines can vary widely depending on various factors like location, market conditions, or how long the property has been on the market. What this slide highlights is a key point for understanding market dynamics. Properties that experience larger drops from their initial listing prices often indicate a more challenging or oversupplied market, or perhaps properties that needed more time to sell. Connecting this to our overall theme, it underscores the importance of setting realistic expectations and understanding how listing prices evolve over time. It also helps us gauge the competitiveness of a property in the current market environment. The deeper the loss, the more likely it is that the market is adjusting or that sellers need to reassess their pricing strategies. Let's take a closer look at this slide. Here, we've highlighted the top 6 companies in our analysis. As you can see, the red bars representing the current prices are consistently below the navy bars, which indicate the issues, and the teal bars that show the listing prices for each company. This visual really underscores an important point. The price journey for these companies has moved from the issue stage to the listing, and now we're seeing the current prices. The key takeaway here is that, despite their growth and development, the current market prices are still significantly below the original issue and listing levels. This gap suggests there may be ongoing challenges or market perceptions that haven't yet caught up with the company's intrinsic value or potential. Recognizing this discrepancy helps us understand where these companies stand in their growth trajectory and why investors might see opportunities here. Overall, this slide ties into our broader theme about market dynamics and valuation trends, highlighting how these companies' current prices reflect a journey that's still unfolding and potential for future upward movement. Let's take a closer look at the key insights from 2021 regarding IPOs in the e-commerce and retail sectors. What stands out is that many of these companies were heavily overvalued at the time of their listing. As a result, they've experienced some of the steepest losses in the market. For instance, Peras Defense, which operates in defense and aerospace, saw a decline of around 67%. Similarly, in the e-commerce and retail space, companies like Nykaa, Brainbees, which is FirstCry, Cartrade, and MedPlus all faced declines ranging from 53 to 87%. This highlights how overvaluation at listing can lead to significant corrections once the market reassesses their true value. In the fintech and payments sectors, Fino Payments Bank and AGS Transact Technologies experienced drops between 62 and 75%. Meanwhile, in the pharmaceuticals space, Supria LifeScience and Emcure Pharma saw declines of roughly 53 to 61%. This sector breakdown underscores one key insight. Regardless of the industry, many of these IPOs that were overhyped at the start have faced substantial losses. It's a clear reminder of the importance of valuation discipline, especially in a market that's evolving quickly. This pattern feeds into the overall theme of market correction and the need for cautious optimism in new listings. Now, let's take a closer look at the top 3 worst performers listed here, starting with Peras Defense and Space, which was listed in November 2021. Its stock has declined by approximately 66.9%, bringing the current price down to Rupee 155 from a listing price of Rupee 469. The issue price was Rupee 175. This significant drop highlights the challenges faced in the defense and aerospace sector, and it's a clear example of how market sentiments can impact even well-regarded sectors. Moving on to Fino Payments Bank, also listed in November 2021. This fintech company has seen an even steeper decline of about 74.8%. The current price is Rupee 137, down from a listing price of Rupee 577 and an issue price of Rupee 543. Payments and fintech are fast-growing sectors, but this example shows that high growth potential doesn't always translate into immediate market success. Lastly, Nykaa, a beauty e-commerce platform, listed earlier and has experienced an 86.5% decline. Its current price is Rupee 271, compared to a listing price of Rupee 1, 125, and an issue price of rupee 1, 125. Despite being a popular brand in the beauty space, this performance underscores the volatility that can exist even in sectors with strong consumer demand. Overall, these examples remind us that even the most promising companies can face significant declines after listing. It's a vital part of understanding market dynamics and investor sentiment, especially when evaluating the risks involved in new listings. Let's wrap up with some important takeaways. First, a quick reminder that this report is for informational purposes only. The prices mentioned are indicative as of May 2026, and this is definitely not investment advice. Always consult a SEBI-registered financial advisor before making any investment decisions. Now, one common misconception is that enthusiasm during subscription, like Nika's 82x or Para's Defense's 304x, predicts how the stock will perform after listing. But that's not necessarily the case. In fact, we've seen many instances where initial excitement doesn't translate into long-term success. This brings us to an important point. Due diligence matters. Many investors assume that the IPO issue price acts as a floor, meaning the stock can only go up from there. However, reality often shows otherwise. Issue prices can be exceeded at listing, but then the stock may crash well below the original price. It's crucial to be cautious and not get carried away by initial surges. Even in traditional sectors like pharma, with companies such as Supria and Emcure, we've seen sharp corrections after listing. This indicates that overpricing at the IPO stage is a common issue across sectors, not just in newer tech or e-commerce stocks. Speaking of which, the 2021 IPO boom in tech and e-commerce was driven by euphoria. Many of those stocks listed far above their intrinsic value. But now, most of these stocks are down by 50 to 87% from their listing prices. It's a clear sign that hype can backfire. So the key message here is to approach IPO investments with caution, do thorough research, and avoid getting swept up in the excitement. Remember, the real value lies in understanding the fundamentals, not just the initial buzz.